Good morning, traders. This is FX Trader Paul here. It's Tuesday, the 1st of November. It's been a good while since I actually put a video on the blog, but as I've been away for a couple of weeks with fighting an infection, I thought this was an opportunity for me to sort of get back into the swing of it and also update you on a trade that I got taken out of this morning. So it's as you can see from this chart, it's the pound against the yen, and I've basically been fortunate enough to benefit from the Japanese intervention. What you're looking at here is the monthly chart. We can probably see, well, you can see for yourself how after the sort of the credit crisis of 2007 and 2008, effectively the money flowed into the sort of safe haven Japanese yen fund, and we can see that it just collapsed here terribly. Absolutely terribly. Well, I say terribly, I'm sure you would have been very happy if you'd been on the short side of it. But anyway, since then it's been bounded about and going round and basing a bit here. And what I tend to do on the monthly charts is just use that to draw in significant levels of horizontal support resistance. As not surprisingly, because they're off the monthly chart, they carry a fair amount of credence. Okay, so anyway, let's go down to the weekly chart and show what I'm looking at. What you can see here is this now is the weekly chart. So we're looking here from the start of 2009, and here was that particular low, as we can see here, happened in the sort of January 2009, and prices really bounced up and gone down, and some might say that you're actually been developing a kind of a descending triangle after in a downtrend. And that's a distinct possibility, but it's outside the remit of this particular conversation. But anyway, the trend lines, the price action, the moving averages, all giving an indication that actually this has been in a downtrend. Actually, what I was looking at here is actually doing a small counter trend trade, which is not normally the way I do, but when I see a very good setup, I'm intrigued to take an aggressive counter trend trade. So that's what this particular trade was. So just take a note of this level of support and resistance, because this is what actually started to get me interested. If I just let's have a little look at it. Okay, what started to get me interested was a few weeks ago was that actually price had come down to this previous low, and actually it just couldn't get below it. We had a nice sort of inside bar followed by a nice low test bar. That's starting to give me an indication that it's double bottoming here, that actually there might be a reaction and that it might springboard up. Because this is the weekly chart, I'm happy to actually take a counter trend trade, because I appreciate that even on a small counter trend trade it actually can run several hundred pips for you. So I'm quite happy with that, and this is what started to get me interested. But what actually developed from there and where my trade came in was that actually after this sort of double bottom, we can see price shot up and then went sideways for a while. But actually what I'm looking at as like to look at price action is that we had a sort of a low test bar here followed by another low test bar, both of which were inside this large sort of upward thrust candle that we had back in early October. So what we actually had was a couple of inside bars which were low test bars. So now I'm starting to get interested about actually trading a break of this. So if we go down to the daily chart, that might actually give us an idea. So what we're looking at on the daily chart here is that, in fact, this level of support, it double bottomed very nicely. We can see some nice sort of low test bar there, giving us the kind of the last push down before it springboards back up. And then actually what happened is that it's created this ascending triangle. What I'm interested in is on the daily chart is that actually there's a lot of the wicks down here. There's a lot of buying pressure, okay, and that's what I'm looking for, hoping for a break to the north, okay. So if we go down to the 4-hour chart, and what I was looking at here, we have the 4-hour chart. This is there's that level of resistance and the kind of the upward level of support. What I'm interested in, and I had no idea or no inkling of any Japanese intervention coming, was that I was really looking for a breakout of that level of resistance. That was basically I set an order on Sunday evening, so basically I had an order to get in at 122.70. And with a stop stop was about 130 points away. That's based upon my own sort of proprietary indicators. So it's quite a big stop. But if you're a day trader, but if you're trading on weekly and daily charts, and this is the pound yen, 130 pips is not a it's not a massive stop, and of course it's always risk managed. So what actually happened was that early Sunday morning the Japanese intervention happened. They basically sold the yen and bought, well, primarily dollars, but also other currencies, and actually I was triggered in. Okay, I had hit my first stop. My first stop was quite my first target was quite aggressive because this was counter trend. So a good part of my position was taken out for plus 70 points, and it then careered up. Okay. What I tend to do with my longer term trades is that I'm always looking to basically let them run, and so once I take my first target, the second one I just trail my stop afterwards, and that's what I did here. Now, of course, with glorious hindsight, it might have been better for me to close out and take a good 400 pips profit, but that wasn't in my plan. My plan is to hit my first target and then trail my stop. And then what actually happened was that this morning that actually I got stopped out here. My trailing stop loss was at 124.44. I got nipped out, and the final portion took me out for about 174 pips. Okay, so there'll be some people who look at that and say, well, you gave back all of this trade, Paul. You gave back all of this trade. You should have just grabbed the profit you could have up here. And that's perhaps a valid explanation with hindsight, but of course hindsight's a wonderful thing. We don't trade with hindsight. My plan was to basically take part and then let the trailing part run and see what actually happens. It wouldn't surprise me, that if price actually came back down and retested this particular level of support and resistance. Will it? I don't know. At the end of the day, I had a profitable trade that took me out for a total of about 244 pips profit, and I was just very, very fortunate to actually take that profit based upon the Japanese intervention. It could have gone horribly wrong the other way, but I was just very, very fortunate on this particular case. So some you win, some you lose. Ultimately, I followed my plan, traded my plan, and so it was a successful trade. So on to the next trade. So I hope you enjoyed that, I hope you helped, and I'll see you at the next video. Thanks.